Raymond in Toronto, what's your question?
Hi, thanks for taking my call. My question's about Square. It's had a really impressive run this year, and just wanted to get your long-term outlook moving forward. Thank you so much.
In the world of structural themes, digital payments are one of the most important ones, and we're still relatively early stages. Square, as you know, sells software and devices for point of sale, and it's a quickly growing market. They're also getting involved in some ancillary businesses, being able to transfer money back and forth. I really like Square. We own some. It's got a very low volatility chart. It is a little extended, but it is a leader in that space, and I have no problem owning the stock.
And we shared about that one on January 1st, up 252% year to date. We got Kevin in Kingston, Ontario. What's your question?
David, you're one of my favorite analysts on there. I really like how thorough you explain everything, and you're one of two of my favorites. The other guy is Ross Healy, and when you're both on, I always watch you religiously.
Well,
my
thank you.
question to you is the valuation of the S&P 500. Now, I know interest rates are low, and we're going through a long recovery, but I've watched you explain that you're still bullish and you think we're in a long-term bull market, whereas Ross Healy thinks we're extended and things are going to turn south. So I'm a bit confused. You say you're bullish long-term. I don't know what you mean by long-term, 5 or 10 years. And Ross Healy is extremely bearish, calling for a serious market correction.
Right.
And that we've reached the top because unemployment is so low, and all the indicators are showing that things are going to start going south. So I like you both, but I'm a bit confused.
Okay.
He's torn, is what he's saying. He's torn
Kevin, this is a great question. Value investors have a very difficult time in a bull market for two reasons.
And Ross is a value.
One, because estimates are generally too low, and they're going higher. And the companies have been beating the estimates by an exceedingly larger and larger number. The second thing is that PEs get expensive and get more expensive in a bull market. So if you sold stocks when they were at the average multiple long-term of 14.3 times earnings in the 1990s, you were out of your portfolio in 94. You missed the 6 best years of the bull market. In the 1950s and 60s, multiples rose all the way through the period as people slowly left the bond market because interest rates were rising. And by 1970, dividend stocks traded at 60 to 70 times earnings. So it's not for me to say how high the multiple can go. It's how are stocks acting. So here's what I can tell you. The percentage of stocks in uptrends has been expanding. That means breadth is getting better. No major correction in history ever took place while that's happening. The major corrections in the bull market of the 50s and 60s were led by 4 to 5 months of deteriorating breadth. And the bear market, the crash in '87, which would have been the next major correction in that bull market, happened after 6 months of deteriorating breadth. So it's not for me to guess when that might happen. I look for what is happening. Breadth is expanding. Earnings are getting better. Stocks are performing well. There's very clear themes. So there's a lot of people who have cost themselves a lot of money by trying to be the smart one to pick the top. You can do it, but your timing has to be perfect. And I don't think that that's worthwhile.
Okay, we're short on time as well. Ralph in Milton, what's your question for David? Quickly.
How you doing? I want to ask about the cannabis stock, particularly Supreme Pharmaceutical. Your opinion, is it going to get taken over by the big guys, and is it wise to invest in this particular stock?
Okay. So listen, if you're investing in cannabis companies, I'm not an expert in the area. This is obviously a very interesting theme in the market. There's a lot of speculation. I think people should be a little bit careful. I think that you could make money. I would tend to focus on the biggest leaders. You know, we own a little bit of Canopy Growth. But that being said, there's a lot of other things that are working in this market. You don't have to focus too much in one area. When you look at a pond and the ice looks thick all the way across, in a bull market, people move further and further out onto thinner and thinner ice. And if you get into a correction, it's the small caps that get hurt the most. So I would just stay a little closer to shore.
All right, we're going to squeeze Kevin in from Ottawa. Give us your question.
Gentlemen, good evening. Thanks very much for taking my call. Thanks for dragging we financial troglodytes out of the morass and lightening the way. my question is it too late for this troglodyte to get into Amazon? I'll hang up and take your listen to the response. Thank you.
A lot of people wonder about this one.
Kevin, I would say to you no. As long as we are in a decent market here, and as long as Amazon continues to beat estimates, it should continue to participate. The leader in a bull market tends to continue to be a leader to the very end. And you are likely to see the weaklings roll over first. Right now, breadth is expanding, so the weaklings are not rolling over. There's more companies joining the party. Stay in the leading stocks. They have a tremendous advantage.
Okay, we got them all in there. We'll be back after this short break. Top picks coming up next.